All right. Thanks for everyone for joining the last installment of our 2020 WASDE preview series. We've had 5 so far. This is the 6th and final one for the year. Things aren't going to change too much heading towards harvest, and I know it's already kind of kicking off. But excited to have Fernanda Harju from SCB on our live stream today. The topic's going to follow the same thing that we do every time, where Fernanda's going to do a nice overview of what's going on in agriculture, specifically talking about how that relates to what SCB is doing. They're doing some really cool things, so that's exciting. And then I'll dip in for a minute, give you a little WASDE preview. Got some hot takes in there today, just to end the season on a high note. Little interesting opportunities that you guys can take a look at relative to our expectations in USDA's. And then we'll go into a little Q&A with Fernanda and talk through her background and how she got into the industry and where things are going. So with all that said, let's get started. I'm going to do a quick intro to Fernanda. Thank you for joining us, by the way, today.
Thank you, Keith. Go ahead.
Yeah. So pleased to welcome you. Fernanda Harju, our special guest, who's a derivatives broker with SCB. And if you don't know, I'm sure everybody does, right? SCB is the global leader in biofuels and low carbon products, right? They are the cash broker when it comes to this stuff, and it's just a fantastic firm. We're partnering with them. We love what they do, and I'm constantly impressed with all the things that they're doing. Specific to Fernanda, originally hails from Brazil, covers FOB Santos soybean futures, and which were recently kind of like listed on SCB Group. So real cool stuff going on there. And then Fernanda has pretty deep history in the agriculture space with stops at Ingredient, ADM, Green Plains, Cargill, the who's who in ag. Which we'll talk about more later on, but really cool background. So yeah, without further ado, I'm going to turn it over to Fernanda. She's going to give you the what's new in ag, and then talk about some of the cool stuff that SCB is doing. So Fernanda, over to you.
Thank you, Keith. Good afternoon, everybody. So I think the hot topic to talk about in agriculture right now is the emergence of this regional markets as dominant players in the physical market that is really changing the way we are trading derivatives and who can have access to those markets. As Keith mentioned, I am one of the derivatives brokers at SCB, and I broker the FOB Santos soybean contract that was just recently launched on the CME. And it's no secret to anybody that Brazil has been dominating the exports market in the last couple years, and it has been surpassing the United States in production. And this year, they're probably gonna surpass the United States in soybean production again. So the CME launching these products really changes who can access these markets. In Brazil's case, Brazil has an active paper market in Paranaguá, but traditionally the companies that can have access to these markets are commercial companies who are trading the physical product. With the futures being listed right now, we eliminate the counterparty risk, and speculators can also play in the market, which previously they couldn't for obvious reasons. They don't want to end up with a whole bunch of soybeans if they can't get out of their position. SCB also is involved in Black Sea corn and Black Sea wheat. They started trading in 2017. Thai rice is also a product we're involved in, and it's going to be launched November 23rd on the CME. And also for commercial companies, if they trade the spread of those products with the Chicago equivalent, they can synthetically trade the bases, which was not possible before this futures existed. So I think that's my 2 cents in what's hot in agriculture right now, and I will kick it over back to you.
No, I got some questions. I know this isn't officially
Yep.
the Q&A component, but no, really cool stuff. In terms of like the basis between U.S. and Brazilian beans, are there margin offsets available for people trading that on CME if you're spreading one against the other?
Yes, there are margin offsets, which benefits the market players that want to get started into this. So yes, there are margin offsets
That's really cool. I mean,
to
because a
trade
lot
and
of times when you're
spread, right?
trading,
Yeah.
yeah, when you're trading these international, products, if they're on different exchanges, right, you got to put up collateral on one side and the other, and it's not optimal from like a capital perspective. So that's a real innovative thing that I think you guys are doing. That's really cool stuff.
Yes.
How's the contract actually settled? Can you talk about kind of like the underlying kind of like benchmark? Because I think you guys are providing that or contributing to that, right?
Yes. So the contract is financially settled for the FOB Santos contract and the Black Sea one. I believe the rice one will also be financially settled. So there's no the CME needs to tie the contract, the derivative, to the physical market, but it's tied to the Platts index, which follows the physical market. But yeah, that's financially settled. So if you go into expiration, you don't end up with the physical commodity at the end. As far as the daily settlement goes for FOB Santos, it's settled with the screen. So what's traded on Globex, they're not getting broker curves. The Black Sea wheat is different. It's a combination of the screen and broker curves. So it really depends on what the CME chooses for each individual product.
Okay.
But the
And
final
then
settlement is the Platts index.
sure. And then like you personally, so you broke futures. Do you broke the physical as well? You work in that marketplace?
No, I broke just the futures. SCB doesn't broke physical soybeans out of
Okay.
Brazil. The Brazilian market already has many brokers involved in that. Doesn't need another
Sure.
one. And I also broker FX, so the Brazilian real futures that can be tied to the FOB Santos contract. I broker that as well, since the Brazilian real is so the exchange rate is so important for the soybean markets
Sure.
in Brazil.
Sure. And is the CME contract, is that denominated in dollars? Is that in real? You call it real. So you're
Yeah.
Brazilian. I'm going to go with real. Yeah.
Yes, it is. It is a Brazilian real futures, and it's the settlement is their. It's a measure of their central bank that I don't remember exactly what it is. So I don't want to
Okay.
commit to
Hey, that's fine. No,
saying
I
what
know
it is.
the Brazilian market can be complex. Yeah, in a former life, I worked at a large trading shop, and we were going into Brazil to trade equities and options. And getting into that market's difficult. I mean, even like we wanted to be co-located in Brazil. It was the actual co-location center was at the BM&F offices, right? They had it there at the time. They were in the process of migrating that. But like even like getting equipment down into Brazil, you needed a broker to do all that stuff. It's not as though we could just order a bunch of, kind of like servers and get that down there. There was a lot to do to get in that market. So, I mean, I'm sure it's opened up since then. But for sure, like being able to trade these sort of products on CME Group is a big benefit to the marketplace, because you only have to deal with one market structure, one point of entry, one FCM, and you get all the capital efficiencies of the margin offsets.
Yep, including the FX now,
Yeah.
because the CME
Yeah,
is also really interested in tying the emerging currencies to this regional contracts. I don't want to put words into your mouth, but I think what you're asking about the FX earlier, so the BRL futures is because soybeans are quoted in dollars per metric ton, right? So you have the FX exposure, but they're quoted in dollars per metric ton. The Brazilian farmer gets, or the Brazilian companies, they get paid BRL. So that's why which is the Brazilian real. That's why the conversion. So, because I often hear people saying, oh, the Brazilian farmers get paid in dollars. They don't get paid in dollars. They need to get paid in reais. You can't use dollars in Brazil to go to the grocery store or something like that. You need to do the conversion of the currency, right? To spend in reais in Brazil. I don't know if this is what you were heading with where you're heading with your question, but I thought I would explain.
I don't think too much. I just talk, and there's not. No, that's fascinating stuff. So real cool. Congratulations on the launch, and I think it's a really fascinating product. The market is huge in Brazil, obviously, for beans, like as you said. Going to be leading in production for the last 2 years. That's amazing, and it would be great to get some more traded products on that in the U.S. So that congratulations on that.
Thank you.
So I'm going to take it over for a minute here, and then we'll go back and we'll talk some more with Fernanda. But got some cool stuff to go through with everybody as relates to our October yield and production forecast. And if you weren't here on the last live stream, we actually did kind of like a sneak peek of our production forecast. So previously we only had yield. That's changed, right? So we are going deeper and deeper into. Let me just try to take control. Oh, you see my whole screen. I don't want that. It's fine. Yeah, so we've been investing in our geospatial capabilities. So historically, or originally, we started with just yield forecasts for the U.S. And we gave a little sneak peek of our production forecasts in the last live stream, and now they're officially rolled out. So if you sign up for a report, you will have gotten our production forecasts on Tuesday's report. So we release that the first and third Tuesday of every month. So cool stuff there. Just kind of diving into what we're doing here. An update on our yield forecasts and the USDA figures. So USDA figures from their September WASDE report which are due to be updated in tomorrow's release. Previously they were 178.5 in SEP, which is down from 181.8 in August. So, you see that impact from the Midwestern Derico right there. Over 3 bushels per acre for corn in terms of a downward revision. Pretty meaningful stuff. I mean, still big numbers at 178.5, but, a pretty big hit from the Derico. And then, beans, 51.9 down from 53.3 in August. So another revision down. It's pretty meaningful revisions. In terms of our forecast, right? So our October forecast that we released on Tuesday through our free report, you can sign up on our website. We actually came in at 178.2, which was for corn, bushels per acre, which is down a little bit from our September numbers, 178.4. And then beans unchanged at 50.5. Interestingly enough, since Tuesday, we've actually revised our forecast up. we're up to 179.3 bushels per acre for corn and 50.8 bushels per acre for beans. So that's exclusive stuff to this live stream. Anybody that's a Commodity View Pro user can also get access to these. They update daily. So you would have seen that actually. I think it came through yesterday that we bumped those up. So pretty cool stuff, right? And I think that makes for an interesting USDA report, because you know what I've kind of been hearing around the market is maybe some of the damage estimates from the original, from the Derico, perhaps weren't as bad as originally suggested. That maybe people are going to be able to kind of salvage more of those crops that were flattened than originally thought. So it's kind of cool getting that information from satellite imagery, the ground truth. Certainly, like, surveys are super valuable, and they're very good in terms of quality. But you can kind of pull some of that information out a little bit earlier with the geospatial technology that we use to generate our yield forecast. So pretty cool stuff. Up a full bushel per acre for corn since Tuesday. So let's dive into that a little bit more. So in terms of our production forecasts, we're looking at 15.2 billion bushels of corn for overall production. So the USDA was at 14.9 billion as of their September report. Our numbers are fresh from today, so those are about as updated as you're going to get. That 15.2 is actually revised up about 116 million bushels from our previous numbers in September. So as you can see, on the corn side, we're actually expecting we have quite a gap between the USDA and our figures in terms of overall production. A lot of that has to relate to just the amount of acres harvested, and our yield estimates are a little bit higher as well. So there might be something there, right? Just in terms of a spread. Looking at beans, it's somewhat of a similar story, but different, right? So area harvested, we're both right at about 83, and again, like, USDA numbers are going to come out tomorrow, so not expecting a huge change from them there. We're at 82.9, so not a big delta necessarily. Yield, we've been below the USDA throughout the season, right? The growing season, even though they revised down by 1.4 bushels in SEP. Versus their August figures for beans, they're still over a bushel per acre higher than us. Whether they're going to revise down, I don't know. It's likely that those might be unched. Maybe even they bump them up a little bit. But our figures are a little more conservative right now. And then in terms of overall production, this is really a function of the yield that they're expecting. So they're actually above us in terms of overall production. So the kind of takeaway here from my perspective is, maybe the damage wasn't as bad as it could have been, or it was indicated, just shortly after the Derico. And maybe there's potential for an upward revision for corn by the USDA tomorrow. Not necessarily there for beans. So something to keep an eye on as you're heading into tomorrow's WASDE report. And I'd definitely be focusing in on those corn figures and seeing what they're doing there. So I told you I'd have a hot take, if you will. So we're not big in the market forecasting business here, but I did kind of run some analysis on that hypothesis there that there is some upside to production for corn and maybe downside to price. So actually both beans, and that's what you're seeing in the area chart there in blue, and corn in that gray line, have rallied over 21% since August 10th. So just using this chart here, corn's up about 21.04%, and beans are up 21.44, right? So what does that mean, right? So if you look at what we talked about in the previous slide, right? If we're expecting, if there's going to be an upward revision for production to come in corn, and that's actually performed just as well as beans in terms of price since that Derico hit on August 10th. It may be, corn is a little overvalued relative to beans at this point. So, a little short corn, long beans relative value position, depending on, what your physical position is, could be interesting to kind of take a look at, right? So, This is my legal department talking. We don't make trade recommendations. This is not meant to be advice, but it's kind of an interesting spreading dynamic there in terms of the fundamentals and price action. So pretty cool stuff that we're seeing, and those are the kind of insights that you can kind of generate using the data that we produce. So all these, like I said, all these production estimates, the yield forecast, they're all available in Commodity View Pro. I know a lot of people on the webinar today have access themselves. This chart is directly from Commodity View, so I should have put a splash in there or some sort of logo watermark, but I didn't have that sort of foresight. But we just created this right before the webinar. So cool stuff, sort of analysis you can do there. If you're not getting our free production report, you got to get it. I mean, it's free. There's no risk. It comes out twice a month. Just follow that link there, or go to the commodity website, and you'll find the price report section. You can't miss it. It's on the homepage. So check it out. You get that twice a month right to your inbox. 10 a.m. on Tuesdays it comes out, and that'll keep you kind of looking good ahead of WASDE, and of course. Accessing that in Commodity View too is also a good call. So, like I said, daily updates available in Commodity View Pro. If you want just figures that are updated twice a month, you can get those through our free report. So it's all there. In addition to just the national level forecast and state level forecast that you get in the report, in Commodity View, you can actually view those at the county level and the CRD level. So a little bit more granular information available to our users there. So real good resource for people. And since I'm talking with Fernanda and she's focused on the Brazilian markets, I would just add, in terms of like a sneak peek for what's coming in 2021, we are scaling these forecasts globally, right? We're going to be going into more domiciles, and just given the interest in South American markets, Argentina, Brazil, I would expect that we're going to have forecasts available for South America as well. So just kind of like a sneak peek there. When we get back into this next year, and we're doing our live stream again next year, come June, we're going to be covering more geographies, more areas, and just kind of previewing more insights for our users. So yeah, that's all I got in terms of our forecast. So taking that, I'll kind of go back into our Q&A section of the live stream, and just learn more about what Fernanda's background and what she's been doing. So yeah, Fernanda, it'd be great to get an overview of your background, how you got into the business. I know I kind of ran through your resume a little bit earlier, but it would be great to hear from you.
But before we dive into that, I just want to make 2 comments about your forecast. And this is Fernanda, the nosy commodity analyst, trying to speak, not Fernanda, the SCB broker. I think you have a point that there's a chance the USDA will change the corn yield tomorrow higher, because NAS released some figures along with the grain stocks report, and they said that because right now for the September report they are at 178.5, which is trend yield, right? And they said that only 3 states in the Corn Belt are below trend. So any other state in the Corn Belt is above trend. I think there's a good chance the WASDE is having their yield at trend. I think there's a chance they might adjust that in October and push that higher. And your forecast was how much was your corn forecast? The yield forecast? You're mute.
Yeah, so our yield forecast for corn is 179.3.
Yeah, I think that would be more probably in line. And the soybean forecast, I ran my own model and I'm getting 50.9, so pretty close to what you guys are getting. I don't know if the USDA will change the soybean yield tomorrow, but I do think that at 51.9, that's probably more than what the January final yield is going to be. How much more? That's the $1 million question. But
Sure.
yeah, my own model is pretty close to what you guys have as well.
Nice. And how are you actually? How's your model kind of build? Like we're doing our stuff with satellite imagery, all that sort of stuff. But there's more than one way to skin a cat, if you will. I don't know
Right.
if that's appropriate to say these days, but who knows? But yeah, how do you build your model?
So I, when I was at University of Illinois, and once I go into my background, I'll talk more about this. But I got a master's degree from the University of Illinois in commodity price analysis, and my thesis was yield forecasting using crop condition ratings that I developed with Dr. Scott Irwin there, and
Okay.
so I'm still using it. It was actually, we got some good results when we did that. So I'm still using it. I'm using the crop condition ratings because crop conditions ultimately is the most widely, most followed yield prediction throughout the season, right? Because you only have WASDE once a month, but the crop conditions are happening weekly throughout the season.
Sure.
And it's free, so people pay attention to that, right? Because the problem
Yep.
with satellite models and weather is that not everybody's going to have access to the data to be able to develop their own model, right?
Oh, totally agree. Yeah, so that's interesting. We'll see what happens tomorrow, for sure. So yeah, that's really cool. I didn't know you had such a technical background, and Mr. Irwin, I recognize that name from lots of white papers that my team has read over the years. It seems to be quite the innovator in building these sort of forecasting models. So I'd love to hear more about that.
Yeah. Well, the thesis itself, it's 180 pages. It's online. You can see it, but Scott had super interesting ideas for that thesis that we even adjusted the crop conditions because the USDA puts the NAS, right, puts the crop conditions together. And Scott had a theory at the time, like before I actually developed, that was actually mathematically proven when I did it,
Okay.
that the way you should weigh the crop conditions should be different for each commodity. So we did a bias adjustment, assuming that the last week of the crop conditions will be the unbiased one, right? Because at that point, all the information was already incorporated. So all the bad weather events or whatever were already incorporated into the ratings, and that's the unbiased rating. And we took the difference and came up to the previous weeks. Are you following what I'm trying to say? To the previous
I
week.
think so.
For
I think
example,
so.
let's say week 40 is good to excellent is the good category is 70. And
Sure.
week 22, the good category is 85 because bad events haven't happened yet. So
Sure.
the good category will be over by 15 points, right? So we did that historically, took a mean to see how biased those weeks before are from the last week. So we adjusted for this bias because we thought that would be a better reflection
Okay.
of the ratings actually are, trying to predict what's going to happen in the future. Does that make sense? Don't know if I explained that
Yeah,
very well,
I
but
might have to I might have to dig into the 180 pages after we get off of this and explore it in more detail. But yeah, no, it's fascinating and it makes sense. It's beyond my capabilities for sure. I'm not the technical expert here. You're outclassing me for sure.
and the second thing that we did was weighing those conditions uh, by production, because what Scott was thinking is that, for example, for corn, uh, good and excellent conditions in Iowa for corn is going to yield something better than good and excellent conditions in, in Alabama.
Oh,
So
for sure.
we adjusted for that, and
Yep.
for corn it actually made sense, right? Because you're gonna get your good and excellent conditions gonna yield you a lot more in Iowa than in Alabama or in a state that's not Iowa, for example. That
Yeah.
didn't make
No,
that much,
that makes
didn't
sense.
make a difference for soybeans, but for corn it did.
Okay. Okay. Cool. So, yeah, how did you get into the industry? How did you get so interested in agriculture? And, did you have a math background and then get into ag, or were you more of like an ag person and got into math, or what's that look like?
Yeah, so like you said, I'm Brazilian. I was born and raised in Brazil. I started college in Brazil in engineering, hence why I like math so much. But I really wanted to be a trader, whatever that meant. So I got the chance of applying to University of Illinois when I was in my third year of engineering in Brazil. I got accepted and moved to the United States when I was 21.
Okay.
So I ended up graduating with a degree from the University of Illinois in agricultural business. During that time, I interned with Cargill in Brazil, in the Midwest of Brazil, in Uberlândia. And then I decided to I had a really good relationship with Scott as an undergrad.
Yep.
And then I decided to go the master's in commodity price analysis, working under him. And then I got an internship with ADM. I was in the ethanol group. And then I moved to GPRE, another internship. Uh, Once I graduated, I came back to ADM, worked in Toledo, Ohio for 2 years as a grain
Okay.
merchandiser. They moved me back to Decatur, and I was an analyst for the origination desk. And I got recruited into ingredient here in the Chicagoland area, and I
Okay.
traded the corn oil position for North America there. And then SCB found me, and I started with SCB this last April. So it's been a couple months.
Yeah, really cool background. You've seen the Midwest, that's for sure. You've been kind of all
Yeah,
over the place, huh?
yeah.
So that's really cool. And
Omaha,
you had some experience. What's that?
Ohio, Omaha, Ohio, Decatur.
Yeah, I love Ohio. My wife's from Cleveland, so I make the drive multiple times a year. It was goodbye. I see a sign for Toledo. I've never been to Toledo, but I see a sign for it. But love Ohio. You got much better rest stops than they have in Illinois. They're really nice and consistent out there. So that's
They
good.
do have better roads.
Yeah, yeah, for sure. So, I know you mentioned you had some experience in the ethanol market. I actually got a question from one of our audience members. They asked, and I don't want to put you on the spot, but we'll see if you got an answer for it. But how do you see ethanol production? The question is, yesterday's EIA report reported a jump in production. Do you expect this trend to continue, or any thoughts on that? Or maybe that's completely out of scope for today.
Yeah, I think there's two things going on in the ethanol market just overall. Before the pandemic, the ethanol market was suffering with overcapacity. Uh, the ethanol industry is just there's too much ethanol that we don't have it like enough houses for it, I guess. We don't have enough outlet for how much the ethanol industry was producing before the pandemic. So I think if we can find a way of passing the blend wall and pushing E15, then the ethanol industry would be okay. But that was before the pandemic, right? So I think it was already kind of due that the ethanol industry would suffer with idle capacity and plant shutdowns at one point or another because of this overcapacity. So to bring the market back to equilibrium, right? And then the pandemic hit and gasoline demand absolutely got destroyed. I think we're gonna continue to see this trend of increasing ethanol, but not at the way it was before. Because the way it was before, it was already too much ethanol that something would happen as far as plant closures and idle capacity. So I think right now the market is moving up to equilibrium, but we're not going to go back to the way it was before.
Okay. Yeah. Yeah.
That's my
that makes total sense.
I mean, I'm not following, the ethanol market on a day-to-day basis or anything, but that's my 2 cents.
Okay. Well, you know more about the ethanol market than I do, so and thanks for bailing me out with the question there. So yeah, so you had a number of these different experiences. We're all over the place, Ohio, Nebraska, everywhere. What kind of like were the turning points that led to these different changes in direction? Was it you wanted different experience, like just you were interested by these new opportunities that came up, or like kind of how, maybe talk through that a little bit?
Yeah, so school is really good to give you the mathematical and very technical training, but it's really difficult, even for PhDs getting degrees in commodity price analysis. It's really difficult to, especially when you do come from, if you traded just derivatives before, if you had like a prop account or something like that, if you have a very math-oriented background, it's really difficult to understand how the physical market is working and how companies like the ABCDs actually operate unless you actually do it. So I really want to, this is what I felt it was lacking in my experience in my background. That's why I really wanted to work for ABCD companies and get to see them from macro scale and what's going on, like what is going on at the plant level. So for example, something that happens with corn oil, sometimes the corn oil is just super high and people don't understand why. And one of the reasons that could happen is because corn oil is a co-product, right? Physically, nobody's gonna grind, and I'm talking here about edible corn oil, which was what I traded at Ingredient. Physically, nobody's gonna crush, nobody's gonna grind corn to get starches and sweeteners because they're the head product if the demand for these head products are depressed. So nobody's gonna want to do that to get the germ to get corn oil. And I see that this type of things sometimes people don't get, and there's a lag between when the demand for the head product goes down and it actually reflects on the co-product. So I remember having this conversation a couple months ago with a couple of my coworkers because they were seeing that soybean oil kept rallying and rallying, and they didn't understand why. They couldn't find any fundamental reason for this to happen. And I was like, well, I think a pretty good guess is that since there was so many outbreaks in the meat plants in the United States, and these guys, when they buy soybean meal, they are pretty hand to mouth, and soybean meal is non-storable. Probably people who are, demand managers who are doing these predictions for the plants already started slowing down the plant because they knew that they had nowhere to go with the meal. So, and that takes sometimes a month or two to, actually reflect on the co-product.
Sure.
If that makes sense. So to me, that was why I wanted to, have different perspectives from these different commercials.
No, that's a really cool approach. I mean, it's you build all these skills and all these knowledge bases when you're starting your career. That's incredibly valuable, right? You got this like huge base of experience that you can take something from here and combine them with something from here, and then as you kind of progress, right, in your career, you can take all those things and work from them. And the understanding you have of these underlying markets is far beyond anything I will ever have. Like I don't have a background in ag. We work in agriculture, and I know ag for as good as I can at this point. But I've never been a grain merchandiser, for instance. I've never been a trader at ingredient. And I don't know that's ever going to be the case, right? So your unique experiences are unique. To use that term twice, but no, that's really cool. So you wanted to get this like exposure to all these different areas, and now you're at SCB, and SCB is like a really cool firm. Love what you guys are doing. What else is going on with the SCB these days?
So, well, we like to get involved in. We like to see what's hot trading in the physical market and get involved into these regional markets that we think is gonna take off. So, like I said, we were one of the first companies to jump into Black Sea corn and Black Sea wheat. We've been doing the FOB Santos contract for about a year and a half right now, and we were the first company to broker an OTC deal in June of, also based on the Platts index, in June of last year. Thai rice is something coming up with for us and for the CME. We've been working on Thai rice for, I don't know exactly how long because I'm not involved in this product, but the CME will be launching the futures November 23rd. The FX that I'm doing now, and I'm the only, for soybeans, we have 4 other people working on the desk, one in Singapore, 2 in Europe, and another one in the US, but I'm the only one doing the FX because it's a market I like to follow. So that's also coming up. We haven't made any block trades of it yet, but we hope that by February of next year, we'll have blocked our first BRL futures. And battery metals is something that SCB started doing. Cool. And I think they started actually at the end of last year. Not really sure, but yeah, battery metals is another new market for us. And there's a couple other exciting things that we're working on, but it's not public yet.
Oh, okay. But you guys are always innovating, like always kind of at the front of a new, interesting product. So that's got to be exciting to be at a firm that has that kind of initiative and drive to constantly be innovating. That's really cool.
Yeah, but hopefully one of the very cool new things we're working on, we're expecting to start next week or the following. So I'll shoot you an email to let you know.
Yeah, yeah, please. So we're getting closer to the end of the live stream here. Had a couple other questions for you. So one quick one, like what's your favorite thing about working in ag?
The people, for sure. If you've been and if you worked in agriculture in the Midwest or in Brazil, it's always kind of the same people that are going from one job to another, and everybody's nice. Yeah, working with ag people is my thing.
Yeah, that's awesome. Yeah, the people are fantastic. Everybody's friendly, willing to help, and maybe don't take themselves too seriously, which is nice for sure. Can get down to business, but don't have to wear a suit all the time. That's great. That's great. And what about, do you have any predictions heading towards the end of the year? I know, it's the end of the year is coming up on us. Anything for 2020 or maybe even like, prognosticate for 2021?
Well, that's a interesting question because I think if there's one lesson we all learned this year is that nothing is impossible and predictions sometimes can be dead wrong. But my prediction for, I think the soybean yield will highly surprise all of us come January. I tend to say it's going to be lower than this 51.9.
Okay.
But again, I wouldn't be surprised if it was something completely crazy that catches everyone off guard. That is at 52.4, So,
Sure.
but I think, well, my prediction is that the soybean yield will be at 51.2 or so, between 51.2 to 51.4. And that's just a gut feeling. I don't have a model backing that up or anything.
Yeah, you gotta feelings. You get sometimes you run on intuition, and a lot of times that pays off. So, no, that's cool. It's great to hear some views and thoughts in terms of what's going to happen heading into next year. And we're always kind of on the lookout for the final USDA numbers. Sometimes we don't personally, as a firm, necessarily agree with the final numbers that come out. But yeah, hey, that's what we're all working against. So it's the truth, right?
And
So
soybeans.
yeah, no, what's up?
No, just for soybeans, the U.S. will have to extend their selling window to cover the Brazilian shortage because of the delayed plantings that's going on in Brazil right now. It's not a concern for the final production yet, but
Hmm.
Brazil is due for some rains in the next 7 days, which should accelerate their planting. Um, but typically, Mato Grosso and Western Paraná are gonna start harvesting in January, first half of Feb, and that ship has sailed.
Okay.
So I
Well,
wouldn't be
we'll be
surprised
on.
to see soybeans going to $11 per bushel pretty soon here.
Okay. Okay. Well, I don't know how that makes my prediction look. Well, actually, I guess I was long beans in my prediction, so that's good. Um, Well, hey, Fernanda, thanks for coming on today. Like I said, SCB is a great partner. We love working with you guys. You guys are fantastic innovators, and it was just an absolute pleasure and delight having you on. So thank you so much, and look forward to talking with you again soon.
Thank you, Keith. You have a good
All right.
afternoon. Bye, everyone.
Yeah. All right. Take care.